Welcome to our live Forex trading strategy session number 6, maybe? But who's counting, right? It's not non-farm payrolls, is it? Where am I? What am I doing? Beat me up, mothership. So, hey, look, it's Friday. That means we're here at fxstreet.com. Very nice to see you. It's Friday, the 29th of May, 2015. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that offers traders Forex and energies, metals, indices, and even binary options. Hoo-ha! It's like a candy store. Cool. So we're doing these sessions here to earn your loyalty, and maybe you'll choose Traders Way as your broker once you become confident enough to trade real money, and you want a broker as a partner over the many years of success to come. And they would like to be that partner. They'd like to be your broker. All right, so what are you guys trading? What's on your mind these days? How can I help? I'll start with a conversation I had yesterday about what is required and in what order it's required to be a successful Forex trader. And I said, well, the first thing that you need is patience and discipline. Would everybody agree with that? That patience and discipline are two things that are absolutely required, no matter what your strategy is, no matter what time frame you trade, no matter what asset class it is. You absolutely 100% have to be patient and disciplined. Patient to let your trades set up properly, and disciplined to pull the trigger when you're supposed to, not before, not after, or walk away when you need to. Okay, so we worked on that, and he seemed to live up to it. This was a conversation with another trader, right? Then the next part was you need to identify support and resistance. You know, Alan adds to it emotional control, flexibility, mind. I think it's very similar, patience and discipline, but, you know, but yes. Okay, support resistance. Do you think you could trade an asset class, any asset class, without knowing support and resistance? It's like buying $1 million house but not knowing if it's worth $600,000 or $2 million. You kind of need to know where the floor is and the ceiling is as far as what the value of that asset is, right? How many people would agree with that you need to know support and resistance in the market? You need to know when prices are low. You need to know when prices are high. All right. Because really, since we don't set the markets, we're not market makers, we're not central bankers, we're not large enough to move the market. So I guess what we're supposed to do is when prices are misaligned, when the market's wrong, we need to be in the process of setting those prices right. We can't do it on our own, so we're going to need other market participants, and that's why support and resistance is so important. And it turns out, this person I was having a conversation with, he's been working on the patience and discipline part and has done fantastic, and then this exercise uncovered the next part, and he was terrible at identifying support and resistance. So I said, you know what? We all need to know this. It's required to be a success. Okay, you have to know support and resistance. So why don't I cover that briefly, and then we can go into technical analysis of the markets today, and we'll try to learn what we covered or use what we covered today in the technical analysis of various foreign currency pairs. How does that sound? Does that sound all right? Am I on task here? Remember, I have a simple goal this year for doing these events at FX Street. Okay? I have a simple goal. I want to contribute to at least 1,000 pips in your trading. I want you to walk away, whether it's, this month or later this year or at the end of the year, but I want you to walk away from these sessions saying, you know what? I know for a fact, because I attended Wayne's sessions here at FX Street every Friday, because of what I do at every Friday at FX Street, there's at least 1,000 more pips in my account. Is that a decent enough goal, guys? I need something to shoot for, right? A plan is specific, measurable, attainable, realistic, and timely. So by the end of the year, I want to help you make an extra 1,000 pips. Who's on board with me? Yeah? There's 76 people in the room, only 12 or 13 are interested. Good. That probably makes sense. For everyone else that doesn't want to try for that goal, go ahead and blow through your trade account, and in a few months, why don't you try options? Take an options course. Pay $2,000 for an options trading course. And if that doesn't work, I don't know. Yeah, so we'll get there. I'm being facetious. I'd like to ask you one thing before we go. This is the page that you registered for this session. You've already been there. You've already clicked on the button. You've already shared your information with FX Street because you're a registered member, all that. I'm not asking you for anything that you haven't already done, except I'd like you to go to that page right now and click this thumbs up. Will you do that for me? Last time we did that, 62 people clicked it. 62. And what you're telling me is that you're on board and that you appreciate these sessions and that I'm not wasting my time because I could do something else. I don't need to do this. But I care about you. I've been working with FX Street, I think, pretty close to 10 years now. So that's all I'm asking for, and then we'll get in, okay? Click that link down there. Give it a little thumbs up, and all that says is you're on board, we're working together, you're happy to be here, and you want me to keep doing these. Because I could just go on summer vacation, just disappear if I wanted to. So I want to know that you care. Could you do the link again? Okay, you can just scroll, but... All right, so let's get going then. Can you see my charts okay? I hope so. Thank you, moderator. Daniel gets a 404. Well, it's not my... Try it again, Daniel. Okay. All right. So that's that. You can see the charts. Okay, good. I don't want to delete that analysis. Let's try this. Oh, don't let me forget about the news, okay? You want me to cover the news? Just, can you tell me like 10 minutes before the news? By the way, thank you guys. 42 people have clicked it. Thank you. I really do appreciate that. And to like the 30 people that didn't, lame. Lame-o, stinko. Yeah, in about 30 minutes, Wyatt? Yeah, something like that. Lame-o, stinko to all the 30 people that didn't do it. All right. Boo-wee. All right. Let's do it this way. Let me back out. Blah, 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 blah. Let's clear some of this out. Let's go to a template. No, that won't work. Scan, I guess. Boom. And let's get rid of some indicators. Look at this, a little mini MT4 lesson. Boop, boop, boop. All right. Boom. Shalaka-laka. Okay, so there we are. This is a currency chart. Let's put it on something more reasonable, like an hourly chart. Or 4 hour. Yeah, let's do 4 hour. Okay. Doesn't really matter what time frame, because the only thing that changes is where in the strategy you are or what strategy you're using. But we're not talking about strategy right now, are we? Oh, is the link that I provided not working? No, this one doesn't work? Okay, good. Thank you, Marina. Oh, is that what it is? It's probably related to me. Sorry. Let's do it that way. It's probably because that's the page I registered on. Okay. Thank you, thank you, thank you. All right. So there are multiple ways to identify support and resistance. The first one I'd like to cover today is price action. And price action is set by higher highs and higher lows. So if we were trending, you could use a trend line to identify support. And support is connecting bottoms. Okay? And when you're making a series of higher lows, you have support. When you connect the highs, you have resistance. Okay? But here's a little note. When you're in a channel, because this is called a channel, when you're in a channel, if it's sloping upward, the bottom one is hardcore support. The top one is just sort of suggested resistance, but is much less firm. It's more like a general guide of where the next high will likely be. Now, it's much more likely to go higher than that than lower than that. So you cannot really go lower than the bottom of an upward sloping channel. If you do, the channel probably died. And it could go above the highest one. So this is sort of like just a suggested resistance, but hardcore support. If you drew it the opposite way, if you drew it, yeah, see, this isn't even, I can't, it's not real resistance, but if you drew it the other way, like sloping down, a series of lower lows and lower highs, or maybe I can do it like this, okay? Series of lower lows and lower highs and lower low and lower high. In this case, the resistance is primary, hardcore resistance, and the support is just suggested. It's just suggested, but it could easily fall farther because now the market is falling, making a series of lower lows, but a lower high, a lower low, lower high. And this could really, the lower low could fall as far as it wants, especially if you add news to it. Okay? So that's one way of doing it. Okay, that's when it's sloping. Okay? Now, what I prefer even more than that, I don't prefer channels so much. Okay? I don't prefer channels so much. I prefer horizontal support and resistance. And that's just personal style. Doesn't really matter. I'm not saying channels don't work. They absolutely. But I prefer horizontal. And I'll show you how. Okay? What I do now is I look for 2 touches. Here was a low. We came down, we hit another low, and I'll mark that. And I believe somewhere in the near future, this level will be support again. So I'll mark that. That's how I do it. And I'll do that over and over again. You see this support? I believe in the future that'll be important again. Okay? And you'll see that it was. Okay? It was, we broke, we came back, I would have sold here, expecting a new low, but we double bottomed out, which now tells me we're range bound. Okay? You can see once we broke above this resistance, the resistance for a while became support. And that's how you use that. Okay? And I'll give you many more examples, but like this low. Okay? So I do this on all time frames constantly. Let's see if I can get more data in here. I'm going to update. No, too much. Okay? And I'll show you how I do this. Let me get my drawing tool going. Where's my drawing tool? Fire that sucker up. Okay. Hang on, it's booting up. Hang on. I know you lost charts. Hang on. Okay. So I'm going to draw, like, ignore the actual price action now. Here's what I'm looking for. Price comes down, rallies up, and starts to fall again. Is the trend up or is the trend down? It's down. So I'm a bear. Okay? If this was a 4-hour chart, I've now made my decision for the day. I'm done. I'm a bear. You understand? I just drilled down to a smaller time frame, but I've made my decision. It took me less than a second. Done. Very, very important. Okay? So time goes on. La-di-da-di-da-di-da-di-da-di-da-di-da. Aha! What's happened? Lower low. I will mark it up. I will grab this low and I'll draw it like this, guys. If this is a 4-hour chart, you know what it's done? I think it'll fall the rest of the day. Okay? So let's say another 4-hour candle, let's say, sort of like New York. Then it's going to fizzle back, and for about 14, or let's say 16 hours, it's going to drift back through the New York close, through Asia, and we'll be right here tomorrow at the London Open. And guess what I'm going to do? Sell. I'll do this day after day after day until that stops. And every time it makes a low, I mark it. Okay, this is a downtrend. And this works on a daily chart, a 4-hour chart, a 1-hour chart, a 15-minute chart, a 5-minute chart, and a 1-minute chart. I tend not to trade weeklies because the fundamentals will change so much that the technicals don't matter anymore. Even a 3-minute chart. Okay, so that's why I do that. That's why I mark these things up. And so we can look at, I don't know, an hourly chart? And that'll be the plan. Up in here, look to sell. Okay? Look it. You ready? Up, 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 higher, high. What are we going to do? Fib it. Buy in here. Up, 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 new high. Drag it over. Buy the retracement. Up, 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 new high. Buy it somewhere in there. Either here or here, doesn't matter. Higher high, draw it across. It came a little lower, but whatever. Higher high, draw it across. Didn't quite get there, but it's still the same idea. Higher high, higher low, higher high, right? Came back, buy it. And then what happened here? Oh! New low. So let me change colors. Right? There's the neckline. Da, 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 da. New lower low. There's the neckline. New lower low. There's the neckline. Oh! What happened here? Higher high. Switch. So now I grab the red again. New higher high. Grab the low. Gap. Big gap up, right? New low. Uh-oh. Change colors. And you just over and over and over again, right? Uh-oh. Change colors. You're on the bull again. Right? So on and so forth. Over and over and over again. That's price action. And so this, again, after the high, I'm looking for support. Okay, after this high, the old resistance becomes support. After the new high, the old resistance becomes support. After the new high, the old resistance becomes support. After the new high, old resistance becomes support. After the new high, so on and so forth. Okay? So you'll see when I'm doing my analysis, now those were 1 hour candles, guys, so that was just 2 months worth of trading, basically, that we did there. So it's not fast, let's say. It doesn't have to be fast. Okay, so I'll constantly do that. Okay? I'm constantly drawing support and resistance. Because sometimes what happens is you don't make lows anymore, so you consolidate before it reverses. That's what's happening here. Okay? When you're range bound, so now the trend is sideways. This is where you can use oscillators to help you sell at the top and buy at the bottom. Once you get a breakout, like we have here, you buy the retracement. What was resistance is now support. You move up here. You're probably asking about this lowest low, right? Is that what you're thinking? That's in your brain, right? Well, Wayne, but, right? Yeah, you know what? I would have looked to have sold that. So I either didn't get a trade or I lost money. Get over it. Okay? And that's how I do it. So that is support and resistance using price action. Okay? You see how the time frames, these little ones on top of these bigger ones? Okay. So another method that I use also uses price, but they're dynamic. So I use moving averages. The first one I like to use is I like to identify the long-term trend. For that, I use the 200 EMA. Why? Why not? And to me, that's called fair market value. Generally speaking, if price is lower than that, it's bearish, and if prices are above it, generally speaking, it's bullish. Not necessarily, but it's just telling me what the fair market value is. Now, what's interesting is that the farther away you get from the 200 EMA, the more likely it's going to come back. It's sort of like pulling on a rubber band. You pull it a little bit, there's not much tension. You pull it a lot, it really wants to come back. Generally speaking, yes, they're EMAs, Christy, but it doesn't matter. You can use simple. Honestly, it doesn't matter. Okay, so anyways, 200 EMA to me is just fair market value. Okay? But that's not required. So why don't we change this now to the 55, and it's going to be blue. Now, that doesn't tell me anything. So over the years, I decided to add a new one. Indicators, trend, 21. Okay. I use these two together, and they represent the same thing. You can almost think of it as a cloud, you know, if this was colored in between, right? And what I'm doing here is I'm simplifying. If the 21 is below the 55, I'm a bear. So you could have shorted here August last year and taken profit in April and been done. The 21 is below the 55. The market is bearish. Now, it's a longer term deal, so I call that the market. To me, that just tells me the direction of the market. Here, the 21 crosses below the 55, I'm a bear. Just recently, it crossed up. I'm no longer a bear, I'm a bull. Okay? Now you can see I'm going to pay attention to this area. Okay? Because of the price action, support and resistance. Okay, so these are a lagging indicator. This price action is a leading indicator. I believe in my heart that right here in the future, I'm going to sell. Now, if you're waiting for moving average crossovers, price is going to have to come up, touch it, and then drop significantly before you get the 2155 cross down. You see what I mean? So this one I already know. This one, we haven't even gotten close to that opportunity yet. Okay? So one's leading, one's lagging. Doesn't matter. So that, to me, this is just helping me make decision processes. But we're using this as support and resistance now, right? When you are using the 21, it's a dynamic level of resistance in a bearish market. When price is below the 21 EMA, the market is extremely bearish, and you should be aggressive. And when price moves to the 21, you sell it. That's why it's there. It's resistance. Right? You don't have to have a group hug. The market's bearish, dude. Sell it at resistance. In this case, dynamic resistance. Okay? Comes down, goes back to the 21, sells down. And eventually, you see, it breaks the 21. Something's changed. What is it? Who cares? But the market has definitely slowed down. It's no longer aggressive. It's sort of moderately down. Okay? And to me, the 21 EMA is dead. It's dead. You can delete it if you wanted. And who's in control? The 55. With 55, you're bearish, but you're conservative, and you believe, okay, and I'm not making this up. I've been teaching this at FX Street for almost 10 years. I believe in that situation, we're probably not going to make more than a double bottom. In this case, it did make a lower low, but then still failed. So I don't know, maybe there was a pivot in there, maybe there was some news, but whatever. My assumption here is at this point is I'm a bear. It will drop, but probably won't make a lower low. And then I'm already preparing for it to move sideways in a trend, or in a sideways trend, in a range. I'm thinking this here, guys, that will come to here and hold. And because of that, that would be a double bottom, which would predict a 100% retracement to here, which would then predict 100 retracement to here, and we would move sideways. I'm already thinking it here. That's what the 55 has told me, a dynamic level of resistance, but the market is slowing down. So my next job is to wait for a breakout, retracement, and two things happen. One, I could use the price action, support and resistance role reversal. In this case, resistance becomes support. Or assume that I'm buying off of the moving averages, which, of course, also happened. Now, Bollinger Bands show volatility, Alan. Okay. You could use them that way, but the math is showing you volatility, not support and resistance. It just looks that way. Okay, so yes, John Bollinger likes to ride the band, but I think other things are going on there, and the bands are a bit of a coincidence there. But the bands do show you volatility, and you can substitute that for volume if you wanted to. But anyways, so once this moves over, your dynamic levels of resistance now have become dynamic levels of support because the 21 is above the 55. And you're going to be in this process now. Okay? You could use the price action, which means it'll make a higher high, higher low, right? It's going to come back and kick off here, but it's also going to kick off the future 21 as it moves, right? Or you can draw a trend line. Yeah, all kinds of interesting things. That's why it doesn't matter. Very often these things just become the same, just using different methodology, right? So that's how the moving averages work, okay? This was a buying opportunity, and I'm continuing to look for buying opportunities for two reasons. One, the market's technically bullish because of the 2155 crossover, but two, we're making higher highs and higher lows using price action. Okay, so that's two different ways. Oh, that was a 2. That's two different ways to measure support and resistance using price. Man, if I would have prepared for this, I could have had a nice slide or something, right? Okay. So what else could we use to identify support and resistance? What else could we use besides price? Well, what's on your chart, guys? Price and what else? Time. Price and time. For that, I like to use Rex original, so they say, boy. I am going to use, let's do weeklies. Doop, boop, 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 boop. Chow. Pivot points. These are weekly pivot points. Okay? The weekly pivot points are doing some nice little math. Okay? It looks at the lowest low of the week. This is a Monday. It looks at the highest high of the week. That just happens to be a Friday. And then it looks at the close of the week, which is significantly higher than the open. Now, if you just measured the high, the low and the high and divide by 2, you'd get the average, which would be middle, right? But if you go high, low, and close and divide by 3, and it's now a weighted average, sort of like an exponential moving average, it's a weighted average to the close, which shows sentiment. So when you use a pivot point, you're using it here on Monday, and what you're asking is, okay, last week, where did it start, where did it close, and what was the emotion of the market at the end of the week? Because let's say the market was fearful this day, but greedy on this day. What's Monday likely to be like? Well, probably greedy, because something's changed in the market. So pivot points are support resistance for the market. What was the market like last week? And what is the market probably going to be like this week if things continue? So low, high, close, divided by 3. And you get this, which is a central pivot point. Not the average, which would have been much lower, but there. Then you use some basic calculations, and you pick. What it does is it gives you a red zone up here, which is the predicted high for the week if the trend is up. If the trend is down, this is the predicted low for the week, using nothing more than support and resistance created from the market. Okay? And look at, on Tuesday, the central pivot point acted as support. There was no other reason for it. Now, we were supposed to head up here, right? We were supposed to head up there. Well, we didn't quite get there, but we clearly bounced off the central pivot point. And do you think this resistance, this is R1, resistance 1. Seems to me like that might have been important for the high of the week. Could be a coincidence, but maybe not. Okay? Then the pivot points, then take a look at the low for the week, the high for the week, for the close for the week, and the market slowed down, right? And the change in central pivot point was minor versus the change the week before when the market was aggressive. So again, the trend is up. So the bottom is actually supposed to be M3 in an uptrend. M3, this is right out of my book that I wrote 8 years ago. M3 is here. That is what you would expect in an uptrend. You would expect that. That is supposed to be the bottom in an uptrend using weekly pivot points. Oh, look, it was. And the predicted top is in this red zone, which we missed by maybe, 3 pips? All right, sorry. Okay. So conversely now, you can see there's a change, right? But if the market is down, well, let me say this again. The market is up. The bottom is supposed to be M3. If the market changes and we're in a downtrend, what's the top supposed to be? Oh, you know what? I'm screwing this up, aren't I? I'm sorry. It's M2. I'm sorry. Wait, I'm so confused now. No, this is M2. It's the same thing. M2. I just screwed it up. That's all. That's M2. This is M3. I'm sorry. My bad. All right. In an uptrend, the predicted bottom is M2. In a downtrend, the predicted top is M3, which this happened to be exactly. and this is the target, which we hit exactly. Sorry. So I better write this out. Make sure everybody's on board. Okay? An uptrend, it's M2 to M4. Okay? Down, if the trend is down, it's M3 to M1. Okay? And you're asking, what's M? Well, these pivot points, you have resistance and resistance, and you have support and support. Okay? So this is support 1, support 2. This is resistance 1, resistance 2. The M is the middle. So all the math is doing is saying, okay, what's S1, what's S2, based on where the central pivot point is. And then the M is like, what's the middle of M1 and M2? Okay, here's that's the central pivot. All right, what M4 is the middle, right between, exactly 50% between R1 and R2. Exactly 50% between support pivot and the central pivot is M2. Exactly 50% between the first resistance and central pivot point, that's M3. And all of a sudden all these lines start being drawn, right? That's all it is. Okay? But it's all based on high, low, and close. Use them together, price action, dynamic levels of support and resistance from moving averages, or support and resistance in the marketplace using pivots. You can use one of those or all of them, but in any case, you need to know where support and resistance is. So, like, for example, I'm eyeballing this big time. Okay? This is a resistance zone in the future. Okay? Now, I'm already preparing to trade up in there. Now, what about different time frames? So let's change this up a little bit. Indicator list, pivot point in history. Monthly. The high and the low and the close of last month. And the rules of engagement are generally the same. Okay? These are not the most amazing, but we've had some pretty big fundamentals on this pair. Go to, you can change this here to daily. How is the daily calculated? The high, the low, and the close of yesterday's trading range. The math is the same, you're just measuring different time frames. So drop into like an hourly chart, zoom in. Okay. Look at this. Okay. So can you see today's low? Let me just zoom in. Today's low is the daily central pivot point. You think that's a coincidence? Look at yesterday, daily central pivot point. All it is it's the low plus the high plus the close divided by 3. And that's all it is. But the thing is, market participants are using them. And it's also the 382 of yesterday's swing and this, that, and the other thing. So I'm not suggesting each one of these is imperative. What I'm suggesting is use something to identify support and resistance, and you'll be much more likely to be successful trading because you're selling where a lot of people might be selling. So, like for example, you don't use pivot points, but do you think that other people are looking at this level for a short? I would say yes, okay? If that happened to be a weekly reversal pivot point, I'd even be more confident. If moving averages came up and then rolled down here, I'd be even more confident. So on and so forth. Okay? Then why, just to sum it up, why is support and resistance so key to your success? Because you are not the market maker, because you are not a market mover. You have to be able to anticipate where the large traders are positioned or going to be positioned. Because, first of all, you don't want to fight against them. And second of all, if you trade it properly and you're trading with them, they'll carry you. And you will float down the river of Forex instead of trying to swim upstream all day. Thank you, Ron. 10 minutes to GDP. Let's cover that. Okay, guys, and then once GDP comes out, I'll do some more technical analysis. How was that, guys? Was that helpful? Okay, patience and discipline first. Okay? But then you got to do some basic analysis, right? All right, only 52 people have clicked the like. That's all I'm asking you. I'm sharing 10 years of trading experience, or more than 10 years of trading experience, in 75 minutes of my life when I could have just taken the day off and gone golfing or something. But I'm here with you. I'd like to know that it matters. Would you please give that a click if that was helpful at all? I'd appreciate it. Okay. There's now 100 people in the room, so 48 people are lame. Yeah. That's amazing, huh? How embarrassing. Yeah. All right, cool, guys. Thank you. All right, so some GDP. Good. Baltic Dry Index is still so low, man. Just amazing. All right. This is a second reading. We're not expecting a good number. So a good number would be good. A bad number would be expected. Personal consumption, over 2%, right? PCE quarter over quarter, 0.9. Well, we'll see. So anyways, the advanced GDP number, if you recall, guys, it was a negative number and was the first negative reading since the fourth quarter of 2008. It's where you give the like, the page you registered on. But I think that works. So a negative number, we're not expecting much, guys. I would like to see it be a little bit less negative. And if that happens, the dollar will probably get strong. Let me put the template back. But just bad numbers all the way across. Just amazing. You know, I think a lot of it was written off with bad weather. For example, so this is Q1, right? First quarter. So we're talking January, February, March. I'm a university student, even though I'm 45 years old. Am I 45? 42, 40-something. I'm 40-something. I was born in the early 70s, whatever that means. And I go to this little school in Boston. And for the first, I think it was 3 or 4 weekends, maybe 5 weekends, it snowed there so much that classes were closed. And for those that had Monday classes, for something like the first 5 classes were canceled. That's how much, right? That's how much the weather was bad in the United States. Now, 50% of the population in the United States lives between Boston and Washington, D.C., 50%. And they got snow, record amounts of snow, like the most ever. So that would probably hurt the economy. That's one of the reasons why the numbers are so bad. But we already know that's already priced in. So, you know, a less bad number would be the surprise. And that would be very positive for the U.S. dollar. Is the stronger dollar hurting the U.S. economy? Not in the Q1 numbers. But really, the way I look at it, Orrin, is it's going to hurt some people and benefit others. So it's all a wash. But they love to talk about it on TV, don't they? But didn't they love talking about how bad the weak dollar was when the dollar's weak? Right? Oh, the dollar's so weak, it's the end of the dollar. Right? The renminbi's going to take over. What? I mean, just it's so silly. When you see an expert on TV and they're like, China's going to take over the world, right? The renminbi, the Chinese yuan's going to be the new reserve currency. I mean, when they say that, they just clearly have no idea what they're talking about, and they're an embarrassment to themselves and to really the TV station for putting them on. There's just no way that would happen in the next, let's say, 50 years. So when I'm dead, all right, when I'm dead, maybe. But China better get going, right? What would China need? Let's just talk about that. What would China need to become a reserve currency? What are the basic things you would need to become a reserve currency? The absolute basic. A legal system? Yeah, you could probably be communist, right? A legal system. Why is the legal system so important? Because when somebody breaks their promise to you, they need to pay the penalty. There needs to be trust. Okay? A legal system that is trustworthy. Okay? Because why? Because a bond is a promise. A promise to pay you money every 6 months. You get a payment, and then at the end of the payment cycle, in the terms of the bond, the covenants of the bond, right? At the end of it, you get your principal back. And then, and you base it all on the time value of money and all that kind of stuff, right? Yeah, I got it. I'm watching it. Thank you. So, a bond market's required because it helps the government, it helps businesses, it helps investment, and all these different things. It's required. But you can't have a bond market where foreigners can invest their money unless you have a legal system. Okay? So, like London, right? Let's say Germany, the United Kingdom, the United States, Japan, Canada, and Australia, very, very, very mature bond markets. Everybody else, not so much. So Canada is much more likely to have a reserve currency than China. So again, guys, the number's going to be bad. That's already priced in. If it's bad, the dollar will be weak for a while, but we'll end up just buying it tomorrow. Although, remind me to go over the daily Stokes. But not so bad, or even a positive number would be ripper strong for the USD.
30 seconds. I'm looking for U.S. GDP at minus 0.9%.
Okay, this is brought to you by TradeTheNews.com. Thank you, Trade the News.
10 seconds. Minus 0.7% above the minus 0.9% expected, plus 1.8% in personal consumption below the 2% expected, and minus 0.1% in GDP price index in line. Canada GDP minus 0.2% in line, plus 1.5% year over year for the month. That's below the 2.1%, and on a quarterly basis, minus 0.6%, well below the plus 0.3% expected. We also saw revisions to the Canadian data, quarterly revised lower to 2.2 from plus 2.4. And year over year for March, 1.9% versus 2.1%. But again, U.S. GDP minus 0.7%, that's 0.2 better than expectations.
Canadian GDP, a miss across the board there. Month-on-month contracted.
Oh, you should see our kitty cat. Oh. All right, there's your short zone. Easy scalp if you guys were trading it. It's already too late.
Plus 2.7% from flat. I accounted for some of the better than expected GDP. Again, GDP still down 0.7% in the first quarter, but 0.2 better than expectations. With that, we've seen muted reaction overall in the markets. The 10-year yield still holding around 2.12%. The euro at 109.68 in equity futures. Still down modestly.
Don't drink the Kool-Aid, guys. It's still 0.7. It's just not as bad, but it's still a bad number. USD CAD is most likely to benefit, or is likely to benefit the most. That's what I'm trying to say. Less than bad, not as bad U.S. data, which is good, and bad Canadian data, which is bad. 4-hour cycles up. It won't last more than today, though. So who knows? So you got to identify the next level of resistance, right? Well, I guess the target's up here. Well, I guess that's... See, what I'm thinking is here on the daily, it's really overbought. But it's got permission, man. It's got permission. It's got permission. I don't know if you'll get another chance. We'll see. Just looking around, I got a lot of charts open. Yeah, USD CAD seems the best. Euro is a little choppy, isn't it? Man, we're still on that precipice with the stock market. My gosh, that's nerve-wracking. Now we got this, it's almost an inside day, it's almost a wedge, it's almost a lot of things. Yeah, it's pretty scary. Check Euro USD on this chart. And caught up in the mud. Next, pig yen. We're having trouble. Come on, Bubba. That was supposed to hit the pivot profit zone today. Well, it's still got chance. I'm telling you, it's got to go up, but here's the problem. The 55 predicts the double top, right? Golly. Well, the 4-hour gives me permission. Where's the 15? Yeah, the 15 would have put me long half an hour or an hour ago. But that's a hard one because we got all that resistance in the way. So here's what will probably happen. So I'll be prepared for that. Next, gold. Yeah, just all it did was come down to our support. Look, just very basic support and resistance. I got to move this one forward because I haven't done it for a month or two. Beautiful, right from resistance right to support. I don't know if you can see that, but it actually wicked down and hit it. Take a look at oil. Still on the 55, probably come up and then down again. This trade plan we set up in December. The short we set up in December. Cool. So I'm just burning through that. Yen. Definitely support. Got to keep it above that, otherwise it's a long way down. It's going to be an important week next week for trading. Let me go back. I had a question. Someone asked about market open. Yeah, there's just tons of them. Let me see which one I'm using there. You are the first one. Session break. Okay, it's called session break. You can Google that. No problem. And you feel like no one before. Yeah. Yeah, this is the same, and I want to show you, well, first of all, there's our plan. So we already knew this was coming down. I got to go to a 4-hour chart, though. You see what we're thinking? We did this 2 weeks ago, I think. So it's coming down. Should I freak out? So it seems pretty logical. I'd like it to turn north soon. Hey, look, monthly central pivot. Wouldn't it be neat if it did that? So I think I drew this before May. It was in April. So anyways, we'll see. You see how important it was that we broke through this? So a bear would do this, up, down, okay? And then a bull would buy this, okay? A bear would sell here, a bull would buy here. Yes, these videos tend to be available on FX Street, yes. Matthew asks about the Trade the News service. I have a site license, and I've been working with them for 7 or 8 years. So I don't recall what it costs, but I think it's a couple $100, and it's only for institutional investors. So I think if you ask, they'll tell you no. If you want to sign up and pay for it, they'll probably tell you no. But if you tell them that Wayne McDonell sent you, or if you tell them you're an FX boot camper, they will let you in. You'll still have to pay money, the full bore. You'll have to pay every penny. I don't get anything from them except loyalty. So you know, you're not putting any money in my pocket, but I can get you in the door. Shh! Don't tell anyone else. All right, so anyways, there's the pig. And then I think we're almost out of time, but I wanted to share with you Euro USD daily chart because it says up. Okay, oh yeah, and the scalp has already failed. Oh my gosh, as soon as I pull it up, look at it take off. Hang on, let's pull this. Okay, there it is. You see the oscillator? And this is called a 1-2-3 pattern. Okay, you have a double bottom, higher high. So you take the previous resistance and you move it over here for a buy zone. Okay, and the idea is it goes up. And if this follows through, this could be up for like a week. Right? Okay, this is just technical analysis. All I'm sharing is the double bottom. These are previous highs. You can see basically a double top. Just like I had taught you at the beginning of today's session, once it makes a higher high, you got to drag this across and say that what used to be resistance is now support. What we didn't discuss today were oscillators, but, you know, these are things I talk about all the time. So that means price is oversold at support. And because this is a daily chart, if this were to make a full cycle, it could be, well, last time it did a full cycle from oversold to overbought, it was 1, 2, 3, 4 weeks, 5 weeks. It could be up for a month. It could. Right? So that's what I'm saying, and that's what I wanted. One of the things I wanted to discuss at the beginning of our session is that we were in this very interesting spot. So if you were a bear on Euro USD, for technically or fundamentally or whatever, okay, that's fine. But don't lose money over the next week or 2 or 3 or 4 weeks selling when price is making a series of higher highs or higher lows. You should wait. If you're a bear, listen to me. I'm not telling you to be a bear. Just listen to me. If you're a bear, there's a possibility that Euro USD could go up for quite some time. And you don't want to keep selling rallies. Don't sell rallies. No. Shh. Don't sell rallies if you're a bear. Wait for it to make reversal patterns for you. Okay? So this is a daily chart. If it comes up and then makes a reversal pattern, now start selling again. Because now it's made a lower high, then a nice little, drop, and then another lower high, and start selling lower highs and lower lows, okay? This thing can go up and up and up. It could, and you might not like it. You might say, well, Wayne, central banking divergence and blah, 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 blah. Don't sell technical rallies if you're a bear. Now, if you're a bull, this is a very interesting spot, and you're going to expect higher highs, higher lows, and higher highs. Okay? And you will buy here, and you will buy here, and you'll keep doing so until the higher highs and higher lows stop. That's where things like double tops or head and shoulders patterns and stuff come in. Okay? Does anybody have a question about that very specific thing about what this bullish setup is, how long it will last, and how to trade it as a bull or as a bear? Because I'm 1 minute over time right now, and I'm willing to answer, but I want to make sure everyone is absolutely clear on this. I'll answer a question if it has to do specifically with that, because otherwise we're out of time. So the reason I'm drilling home on this is that if you keep selling rallies because you sold yesterday or 2 days ago and you made all those pips, great. You're going to give them back, and I'm trying to make you another 1,000 pips. How do we weigh that against the plan we had for selling it? Okay, well, I'm not sure what you're saying, Wyatt. Maybe ask it again. Well, I'm looking at the dollar index. Someone said about a dollar index. We're working our way to monthly R1. We're currently touching weekly R2. I don't see it yet. It is overbought on a daily if you look at the Stokes. But besides degenerate gambling to get amateurs to buy your DVDs, I don't see any reason to say that. But it's possible. Yeah, why? The scalp. Oh, yeah, well, a scalp's dead, right? A scalp is a scalp. Right, so how have I been... Oh, not the scalp. What? Keep asking, man. Keep asking, Wyatt. How do we weigh that against the plan before we had selling it? Selling the 382 of the drop. You mean you have it set up this way? Well, you got to be careful. You have to be careful because we haven't cleared through this noise yet. This is a definite bullish zone, guys. Definite bullish zone. So, if I were to guess on this, because of the quality of the bullish setup, it's going to make at least a 618, maybe even a 786. So I'm eyeballing it. This could go up to 113. And then we're way up here, okay? Then we're way up here at 113. We're 90% overbought. We're sort of in this zone. Maybe it's 112, whatever. But it fails to make a higher high and then turns south again. But then that would create this, right? And now we'd have this going on. Does that make sense? And that would be all right by bears. Okay? I want to leave you with one message. Okay? If you're a bear, you sell high at resistance. That usually includes green candles. If you're a bear, you sell high at resistance, usually with green candles, not red. We just fell 1, 2, 3, 4, 5, 6, 7, 8 days in a row. Now you want to sell? You don't sell at support. You don't sell 8 red candles. So as a bear, you're going to look when prices miss, when the price is wrong, and that's when it's overvalued, and you come in and you say, there's no way that Euro USD is worth 113. And then you bring it down to the proper price, which would be about 105. Okay? And if you're a bull, you buy low, you buy a bunch of red candles at support when it's oversold, and then starting to turn up. Okay? Peace on earth. May the pips be with you. May your profits be above average. Thank you to FX Street for being fabulous, good-looking, smart, intelligent, kind-hearted, and athletic people with good taste and natural abilities and an eye for art. Thank you, FX Street. I'm hoping that you can give me a like for this session. Again, over 100 people attended, of which 1/3 are lame. But 2/3 are awesome. Thank you, guys. I appreciate it.